The Reserve Bank has a blunt warning for anyone wanting a big wage rise. The Albanese government looks for a reason to go to the polls again. And Woodside gives the go-ahead for a $10.5 billion oil project. It's Wednesday, the 21st of June, 2023. Welcome to Fear and Greed, Australia's most popular business podcast. I'm Michael Thompson, and good morning, Sean Aylmer.
Good morning, Michael.
Sean, after the show today, you have an interview that, look, I think it is worth anybody in business listening to today's conversation. You're speaking with Cara Peake, who is a lawyer and an entrepreneur, and she's the co-founder of Cultural IQ, which is an organisation providing I suppose you describe it as culturally appropriate training to Aussie businesses.
Yes. Now, Cara, she's an Indigenous woman and her background is in training or helping businesses understand the cultural sensitivities around First Nations people, but it goes beyond that. It's about anyone. And so we talk about how companies and firms should handle it, should think about it. Just understanding some of the complexities of it is a great starting point, just becoming more aware. We talked to Cara about that. I think it's something that we're going to hear a lot more about in coming years as hopefully, more workplaces become more culturally diverse with First Nations people and others. And so I think it's a very worthwhile conversation to have and well worth a listen.
Yeah, absolutely. It's coming up a little bit later on. The main story this morning, though, Sean, the Reserve Bank has provided a pretty blunt warning. If workers demand wage rises to match higher inflation and companies index their prices to the cost of living, then interest rates, unfortunately, will just keep rising.
Yes, the minutes of the Reserve Bank board meeting show just how worried the central bank is about the labour market in terms of too much strength and not enough productivity growth. The Reserve Bank lifted the benchmark rate 25 basis points to 4.1% at the beginning of this month, a couple of weeks ago, surprising many commentators and triggering a rush of downgrades for economic growth. In fact, every major bank over the past fortnight has lowered expectations for growth. The minutes say that firms increasing prices and self-sustaining wages growth linked to past rates of inflation will make it much more difficult for the bank to contain inflation. And until it contains inflation, it's just going to keep lifting interest rates.
Sean, that's all okay to say, right? But how do you actually stop it from happening? People are going to demand higher wages because they're having to pay more for everything in the shops and their power bills and everything. And then companies are going to keep passing on higher prices if they can.
Yes, very good point, Michael. Now, the best way to stop it is to slow the economy down, which is exactly what interest rate rises do. It also pushes unemployment higher. The labour market has been on an absolute tear since late 2021, creating 1.1 million jobs, and the level of employment is now almost 8% above its pre-pandemic level. Pretty remarkable. Mostly, they've been full-time jobs. That means a lot more money in the economy. Underemployment, whereby people can't get enough work, that's at its lowest level in 15 years. Yesterday, we got some insight into how much higher the unemployment rate, which is currently at 3.6%, needs to go to stop inflation. Deputy Governor Michelle Bullock said an unemployment rate of 4.5% is the lowest possible level consistent with the Reserve Bank's inflation target. What she's saying, unemployment doesn't have to get to 4.5% before rates stop rising, but unless it starts to rise, we are still going to have a bunch of rate rises. The central bank expects that the unemployment rate will hit about 4.5% by late next year, though I've got to say thus far the labour market has proven very resilient. Of course, when the unemployment rate rises, that translates to tens of thousands of job losses. In fact, it's about 140,000 jobs that we need to lose. Not exactly something to look forward to, but it's kind of the flip side to the interest rate debate. It's what happens to employment.
Really, it seems like it's impossible to please everybody. Like, you can't keep everybody happy in this situation, can you?
No, I mean, that's just an economy though, really. There's always good with the bad. I often think about investing. For every buyer, because there's a great deal, there's a seller who doesn't think it's a great deal. The economy is a bit the same way. You push up interest rates because you need to stop inflation. That slows the economy down and that will hurt employment. So it's a dismal science for a reason, Michael.
I'm glad you're the economist here. I'm too idealistic to be an economist. I just want everyone to be happy, Sean.
Oh, yes, well, we wouldn't have jobs, would we?
No, we wouldn't. How did the local share market go yesterday?
It was up again, this time by nearly 1% to 7,358 points, which is its highest finish since April 20. It's 7 sessions in a row of increases. Energy, real estate and financial stocks were the best performers yesterday. Woodside and Santos both rose by more than 2%, while BHP, Commonwealth Bank, National Australia Bank, Westpac, Woolies, Aristocrat Leisure, QBE, Brambles was in there, so too Xero. They were all up by more than 1%. Of the top 20 stocks, only CSL, the healthcare company, and Gold Digger Newcrest Mining were lower. Fund manager Magellan was the ASX 200's best performing stock, rallying nearly 6%, helped by buoyant markets. That is a company that has had a very rough 18 months or so. Nice for its shareholders to see a bit of a bounce yesterday. Lake Resources was the worst performer, diving 20%, the same as Monday, after its lithium project in Argentina was delayed by 6 years. In other corporate news, Michael, Star Entertainment yesterday was spared a major tax increase by the New South Wales government. That was good news. But the bad news was that a deal to sell some of its Brisbane casino and hotel buildings fell through. Its share price ended down more than 3%.
And what happened on international markets?
The big news really was out of China. It reduced some interest rates again yesterday, adding to the rolling out of support measures for the world's second largest economy from Beijing. The question among investors and traders is whether the stimulus will just keep coming or whether Beijing won't do much more. That makes it a little bit difficult. Certainly a stronger China is good for Australia, economically at least. In commodity markets, oil is down just a touch again. Not a lot of movement otherwise. The Aussie dollar has fallen back again. It's below 68 US cents.
All right, plenty happening today, Sean. There's some big stories coming up. We'll be back in a moment with the rest of the day's business news. Sean, the Albanese government is seeking constitutional advice on whether the Greens' continual refusal to allow a debate on the $10 billion social housing fund is grounds for a double dissolution election.
Oh, wouldn't that be nice to go to the polls again?
Well, it's always great theatre, isn't it?
It is great theatre.
And we get an awful lot to talk about, but goodness me, election campaigns can just be a bit of a punish, can't they?
Yeah, I'm hoping not. Basically, the Greens are demanding the government enact a national rent freeze before considering the Housing Australia Future Fund bill. But Prime Minister Anthony Albanese yesterday said that was not only untenable, but it would result in less supply and make the problem worse. A double dissolution trigger is gained when the Senate fails to pass a bill twice with a minimum of 3 months in between. On Monday, the Greens and the Coalition teamed up in the Senate to defer debating and voting on the bill until October 16. That could be the first half of the double dissolution trigger. Albanese told the caucus that the Greens are bringing a juvenile student politics approach, and that just the Greens? Really?
Yeah, it kind of takes two sides or sometimes even three sides to have a student politics approach. And yes. Goodness me, I don't think everyday punters like you and me, there is much kind of tolerance for student politics in Canberra.
There's not much tolerance for student politics when I was at university, as far as I was concerned. Were you in student politics, Michael?
No, I wasn't, because I'm sure I told you this story before, that even in high school, there was, how there's the SRC, and I didn't like the way it was being run, so I started a separate movement, the Independent Students Union. Then all of a sudden people started, and I was obviously the self-appointed president.
Naturally.
And all of a sudden people started talking about the Constitution and we need to vote in leadership. And I'm like, I don't like where this is going. So I disbanded the whole thing and never mentioned it again.
Well done.
I could see the way this was going to end up and I did not like it. So anyway, student politics, not for me.
Well, I've got to tell you, I joined both the Liberal Party in my first year and the Labor Party in my first year. I went to University of New South Wales. Because why? Free beer.
There we go.
Simple as that.
You took a very bipartisan approach to free beer. I love it.
Yeah. Anyway, the whole point of this is that the Prime Minister is looking for a reason to get a double dissolution election or make a double dissolution available.
Sean, what else is going on in Canberra? It feels like a bit of a loaded question because there's always plenty going on. Any more on the voice referendum?
Well, yes, Prime Minister Albanese yesterday said the referendum will be held sometime between October and December. The smart money's on October 14, but he seemed to push that back a little bit yesterday. The government also said it will commit a further $500 million from the Northern Australia Infrastructure Facility to help kickstart a critical minerals processing industry, which it claims could create $134 billion in new economic activity and 262,000 jobs by 2040. And Michael, there's a great story in the Sydney Morning Herald and The Age yesterday. Since he was elected on 21 May 2022, Anthony Albanese has held 172 press conferences and doorstops across Australia and overseas, given 89 TV interviews, 128 radio interviews, much more than his predecessors. The Prime Minister spreads the love around, having appeared on 7 Sunrise and 9 Today programs 14 times each, and ABC's News Breakfast 11 times. He's appeared on 10, Sky, AM and FM radio, print. A big fan of communicating widely is this Prime Minister.
Certainly seems to be the case. And speaking of communicating, Sean, Communications Minister Michelle Rowland.
Nice.
Yeah, I'm pretty proud of that one. Has asked for a briefing about the job cuts at the ABC that were announced last week.
Yes, one high-profile journalist to lose his job is Andrew Probyn, the political editor of the national broadcaster. He was reportedly let go because he filed mostly for the TV news and not across mediums or other mediums. Some of his colleagues definitely disputed that. Rowland said the government had boosted funding for the ABC and put in a 5-year funding plan. Ultimately, the ABC is independent, she said, then added she still wants a briefing on it.
Of course. Sean, Woodside has approved the development of the $7.2 billion US or 10.5 billion Aussie dollars deep water oil project in the Gulf of Mexico, which it expects to begin production in 2028.
Yeah, I think this is an interesting story given the push to renewables. So the final investment decision on the development, called Trion, of which Woodside's share will cost $4.8 billion US dollars, is the latest expansion plan by the oil and gas company, despite mounting environmental pressure to rein in its spending on new fossil fuel developments. According to a report in The Australian, Woodside said Trion makes excellent financial sense and its large oil reserves will generate lucrative returns for shareholders. Chief Executive Meg O'Neill said the project will be beneficial to shareholders and the global energy transition because it will help fund the shift to new energy. O'Neill said 2/3 of the Trion resource is expected to be produced within the first 10 years after startup.
Now, Sean, wind farms, along with solar, are often the answer to renewable energy questions. But this is interesting. The economics of building them doesn't always make sense, according to consultancy McKinsey.
Yeah, so Australia needs to double the number of wind farm projects, but they are providing marginal returns, becoming more expensive, and there just aren't enough transmission lines to connect the farms to the consumer. McKinsey partner Peter Lambert, speaking at the Australia Energy Week Summit, said just 40 gigawatts of utility-scale renewables, including solar, will be delivered by 2030 at current momentum. Much more is required. A final factor holding back wind farms is a lack of power purchase agreements. These are deals with big power users to secure electricity supply at a reliable cost. They say, yes, we'll take your power. That helps provide finance to develop the wind farms, and that's just not happening yet. That's another major problem.
And also at that same conference, Sean, was Australian Energy Market Operator CEO Daniel Westerman, and he called for rooftop solar owners to become part of virtual power plants.
Yes. Now, we've spoken about this on Fear and Greed before. The idea is that rooftop solar owners in a geography group together and feed power into a battery, which is then called on when needed by people within that geography. Rooftop solar is already the largest single source of capacity of renewable energy in Australia, and Westerman wants homeowners to become much more active participants in the energy market via these virtual power plants. He also called on Australia to become more energy efficient, saying that we are currently ranked 18th out of 25 in efficiency. Not real good.
Sean, another day, another retailer warning that sales are waning in the face of the cost of living crisis. Yesterday, it was general merchandise store Best and Less.
Ever since I saw those Betty Best and Lottie Less ads growing up in Orange
Goodness
in
me.
the 70s or 80s.
Just how old are you, Sean?
Well, old enough to know about Betty Best and Lottie Less. I've always loved this store. I don't know why. Basically, sales have slumped 13% and its half-year profit is expected to be as much as 2/3 lower due to heavy discounting. The company is currently under takeover offer from billionaire entrepreneur Brett Blundy. That pretty much saved any major sell-off in the thinly traded company yesterday. So we've had Wes Farmers, Treasury Wine Estates, Domino's, Baby Bunting, Michael Hill, Maggie Beer, Dusk, Best and Less, all talking about a consumer slowdown. It's really happening, no doubt.
It does seem like that. And you've been calling it now for a little while and you keep on putting forward evidence. And at some point, Sean, we're going to have to say Aylmer was right.
Well, I've got to say, every economist out there, Reserve Bank, they've all been calling this too. So I'd like to take credit, though.
Just take it. Just accept it.
No, you're right, Michael. I got this first.
Excellent. And don't no one go back and check the tapes. Last one, Sean, before we get to international news. Renter confidence has fallen to record lows on the back of rising prices, according to the weekly ANZ and Roy Morgan survey.
Yeah, so confidence among that part of the housing sector fell back to its recent all-time low, which it first reached in mid-May, according to AAP. Tenants have faced surging rents as a shortfall in listings collides with the rebound in overseas migration and international students post-COVID. Meanwhile, confidence among mortgage holders recovered a little over the past week. But interestingly, for those who have paid off their home loans, sentiment sunk to its lowest level since early April 2020.
Okay, turning to international news now, and legendary investor Warren Buffett is upping his stakes in 5 of Japan's trading houses, which he first bought into earlier this year in a sign of confidence about the country's economy.
Buffett's Berkshire Hathaway now owns an average of 8.5% in each of the conglomerates, which do everything from gas trading to salmon farming. According to Bloomberg, the groups announced a surge in profits last fiscal year on the back of higher commodity prices and the weaker yen. Buffett's endorsement, combined with signs of stable inflation and better shareholder returns in Japan, have helped that country's stock market hit a 33-year high. Berkshire also said it plans to increase investments to up to 9.9% in each of the 5 Japanese firms. Certainly a sign of confidence about what's going on in the world's third largest economy.
The US and China have made, quote, progress towards stabilising bilateral relations, Chinese President Xi Jinping declared after holding a long-delayed meeting with US Secretary of State Antony Blinken. This is big news.
It is. Xi's comments represent the strongest signal yet that Beijing is willing to consider a truce in its increasingly acrimonious relationship with Washington, according to the Financial Times. Speaking in the Great Hall of the People with Blinken, the first US Secretary of State to visit the Chinese capital since 2018, Xi said whether China and the US could get along had a bearing on the future and destiny of mankind. The two countries should probably handle Sino-US relations with an attitude of being responsible to history, the people and the world, Xi said. He added the two sides had made progress and reached agreement on some specific issues in extensive talks between Chinese officials and Blinken during the 2-day visit. Speaking during a visit to California after that meeting, US President Joe Biden said Blinken had done a hell of a job in China.
All right, up next is the Fear and Greed Daily interview. You're speaking with Cara Peake, a lawyer and entrepreneur, co-founder of Cultural IQ. This is a really important and interesting conversation.
Sure is. Mostly about what businesses can do to improve their cultural IQ with First Nations people, but across all peoples. Well worth a listen.
Yeah, it's coming up next in the Fear and Greed playlist on your podcast platform or at fearandgreed.com.au. And Sean, today is, of course, Wednesday, and you know what that means?
Yes. How can they afford that? What's it about today, Michael?
Well, Sean, today it is all about franking credits.
Riveting stuff, Michael. Riveting stuff.
If you've ever wanted to hear somebody out of their depth, then listen to me quizzing Canna on franking credits. She's all over it. Me, I'm like, let's start with the basics, Canna. And so it's...
Why are they called franking?
Look, Sean, you better just listen to the episode.
I will definitely listen to the episode. I just wanted a little shout out to one of our social media hounds. Came in yesterday. I'm just going to call him John K. You clearly haven't mentioned him yet. All he said, yesterday we discussed a lot about Harry Potter, and I've never really seen Harry Potter. I've read the first book. I'm not really rushing to read the rest, etc. John Kay, I'm with you on Harry Potter. Who even watches that dribble? Love you, John Kay. Well done.
Well, John, look, you're not getting a nomination for Mia for Most Enthusiastic Advocate.
He's getting the Best Bloke award for the day.
No, he's not. You know what? He's almost having his license to listen revoked. But you know what, John Kay, you're on probation.
Ooh, there you
That's
go.
tough. We run a tight ship here, Sean. Anyway, thank you very much, Sean.
Thanks, Michael.
It's Wednesday, the 21st of June, 2023. Make sure you're following the podcast. Join us online on LinkedIn, Instagram, Twitter, and Facebook, and stay up to date on all the business news with Alexa and your Amazon Echo smart speaker. Simply say, Alexa, play the Fear and Greed podcast to catch the latest episode, and grab yours now at amazon.com.au. I'm Michael Thompson, and that was Fear and Greed. Have a great day.